Great clinical research professionals aren't born, they're built. In each episode, hear from leading experts in clinical trial management as they inspire and motivate you to become an effective leader. Welcome to the Clinical Trial Podcast. Here to help you accelerate your career is your host, Kunal Sampat.
Hi, friends. Welcome to another episode of the Clinical Trial Podcast. I'm your host, Kunal Sampat, where my job is to help you accelerate your clinical research career. One of the little known and less discussed aspects of clinical trials is insurance. What type of insurance, if any, is needed to conduct a clinical trial? What does purchasing a clinical trial insurance policy entail? How does starting a new clinical trial impact your medical product insurance policy? To answer these questions and more, I invited Dan Fuld to the podcast. Dan is a seasoned insurance professional with 10 plus years of underwriting and broking experience. Dan understands the needs of his clients and leverages his industry knowledge, relationships, and experience to ensure his clients obtain best-in-class asset protection programs. Dan and his team also assist in the implementation of alternative risk mitigation strategies and see themselves as strategic partners in those in the life sciences space. Dan graduated from Katie School of Insurance at Illinois State University, where he studied risk management and finance. Dan received his Chartered Property Casualty Underwriter (CPCU), Associate in Surplus Lines Insurance (ASLI), and Associate in Risk Management (ARM) designation in 2013, and received his Property and Casualty Producer's License in 2018. Please join me in welcoming Dan on the Clinical Trial Podcast. Dan, welcome to the Clinical Trial Podcast. I'm really excited to have you on the show.
Yeah, thanks for having me. It's great to be here today.
You know, I was debating if I should talk about how we met, but I think we should to get
I think
people.
so too.
I think that would be a good place to start. So you want to go, or do you want me to?
I'll let you go. Let's hear it from your perspective.
Okay, so my wife and my kid, we were having a one-day staycation in San Francisco, and then Dan is, I think, in line ahead of us, trying to check in or trying to get some help from the front desk. I don't exactly know what it was. We didn't really talk. I don't think we had any conversations, and then I checked in. I went to my room, and then later, I think that day, we ran into each other again in the lobby, and I think also at the bar upstairs at night. And here we are recording this episode because we struck a really awesome conversation at the bar about your work, and it turns out that you also work in the life sciences clinical trial sector, and I was really excited to have you on this show.
Yeah, definitely a serendipitous meeting.
Yeah, you just never know who you run into, right?
You never know.
Yeah. So if I remember correctly, Dan, you have an undergraduate degree and a graduate degree in insurance. What made you so interested in the world of insurance?
So it's twofold. I went to university in 2008, and at that time, as your listeners and everyone may know, there was a financial meltdown in the finance world. As such, I decided, and through some guidance with some of the folks at the university that I went to, that I would double major in insurance and risk management. And the way they had sold it at the time was that there was a 99.9% job placement rate. And at that time, there wasn't a lot of jobs out there, especially in the finance sector. So that's how I fell into it. It's one of those industries that most people fall into it. I just say that I happened to fall into it in college. So.
Got it. And then you ended up getting a master's in insurance as well. Was there a subspecialty that you worked on, or does that work?
Yeah, so it's actually a double major. I have a major in finance and then what they call RMI, risk management and insurance. So it's a two-pronged major focusing on commercial insurance.
You know, our focus today is going to be clinical trial insurance, but I know you work across the life sciences sector. So I wanted to maybe start off with, who are the different stakeholders when it comes to purchasing insurance for life sciences or for clinical trials? And then I want to understand, or like the listeners to understand, how are their roles similar or different from each other? I think people that are working in in clinical trials may not really understand the different individuals involved on the insurance side. So can you walk us through that, Dan?
Yeah. So the main purchaser, the main buyer of insurance is the sponsor of the clinical trial. So whoever is actually conducting the clinical trial at a research institute, whoever's product or idea it is, that's who needs to carry product liability insurance. As you move down the ecosystem within clinical trials, you also have clinical sites. You could have contract research organizations and or investigators, and all of those folks would have some stake in the insurance procurement. Typically, the sites and the contract research organizations are going to carry their own insurance for their own medical professional liability. However, they do have a vicarious liability uh, to the products that are being tested by sponsors that they are engaging with. So typically the way that works is the policies that are procured by the sponsor of a clinical trial are going to provide some level of vicarious liability coverage to the other stakeholders that are involved in that trial.
Can you explain us, like, or me, what vicarious means, that word?
Yeah, so in litigation, as many of the listeners may know, it's one of those situations, especially here stateside, where everyone and everyone will be dragged into a lawsuit. So if, for example, a clinical trial goes terribly wrong, whether it's the sponsor's fault or the product's failure, whether it is a medical professional error borne by the site or the contract research organization, all parties will be brought into suit. And because of that, all of them want to make sure that the other party is carrying insurance for that vicarious liability.
Got it. So when you mean here on the state side, is it the California, you mean, or?
Yeah, the US is the most litigious country in the world, bar none. And because of that, the way the legal system here works, the way plaintiffs' attorneys work, we just have a much higher rate of litigation. And when you move outside of the United States and conduct clinical trials there, the same exposures are present, the same potential liability could arise. However, everywhere else in the world is just not as litigious in nature as we are here in the US. So it's even more important for the stakeholders here to procure the right insurance and making sure indemnification, hold harmless language, et cetera, is strong within the contracts with those partners.
Got it. Okay. So, and then when it comes to, so you basically, if I understand correctly, there is the product liability insurance, and then the clinical trial sites also carry their own insurance, and the CROs carry their own insurance. And then the sponsor is the one who kind of carries the product liability insurance, and the investigators are somewhat covered by that, or not.
Correct. So the site is going to have their own medical professional liability. The contract research organization is going to have some sort of combination of medical professional liability, product liability, as well as professional liability. And then the sponsor, the way it actually works is within a clinical trial insurance policy, there are provisions that provide carve-backs for medical professional services that are rendered by sites, investigators, etc., as long as they are adhering to the protocol that was prescribed by the sponsor.
Got it. So maybe can we walk through, like, the different types of insurance policies that organizations purchase? Maybe we do a 30,000 foot, maybe not, it's up to you how you want to frame it, but maybe from a site perspective, a CRO perspective, an investigator's perspective, and a sponsor's perspective. So each of those, if we could kind of walk through those.
Yeah, so I'll start with a very overreaching comment here that all businesses, whether it's a life science company, a construction company, etc., carry certain insurances that are either statutorily required or driven by contract. the general ones would be general liability for your on-premises exposure, workers' compensation, which is a statutory coverage if you have W-2 employees, auto liability, whether that's for your vehicles you own and or vehicles that are being driven by your employees that they own. That's property insurance for first-party property. So that's a very important one, especially if you're, let's say, a biologics manufacturer and you have temperature-sensitive product being stored. That could be a big exposure for you. But drilling down specifically into the types of insurance that are relevant for clinical trials, starting with a site, they're going to have medical professional liability for their doctors who are performing treatments, conducting clinical trials, etc. Your contract research organization is going to have, and contract research organizations can sometimes act as sites and vice versa. So there is a little bit of crossover there. However, one of the key distinctions between a contract research organization and a site management organization is that contract research, the name almost says it, but contract research organizations typically render a service for a fee. And that service could be preclinical. So they could help you design your protocols, inform consents. It could be clinical, so they could help actually conduct or recruiting patients, and then moving on to the actual conduct of the clinical trial. And there is an additional exposure borne by the contract research organizations that sponsors will typically require, and that is what they call professional liability. So not for the rendering of medical professional services, but for the failure to perform as outlined in the contract. And that failure could cause financial harm to the sponsor. An example of that financial harm would be if the contract research organization was erroneous in their recruitment of patients and it delayed the trial, the sponsor may suffer financial loss if it takes longer to get the product to market. And then the investigators typically carry their own medical professional liability, as most of them are docs or physicians, something of that nature. And then they are indemnified, or they're covered by the sponsor's product liability for their medical professional services that are being rendered in connection with clinical trials. So that's kind of how everyone in the ecosystem there is covered, and that's the exposures that are unique to them.
Got it. So we talked about like at a high level, the general liability, workers' comp, property insurance, and then I think you said liability, some sort of liability insurance, auto liability insurance. And then for the sites, it's the medical professional liability. And then for the CROs, it's the professional liability and possibly the medical professional liability, both if they function as a site. And then what about SMOs?
Site management organizations, yeah. So that's kind of that crossover, and it really is. That's where that crossover between contract research and a site starts to happen. So site management organizations, they may have beds where they admit patients and actually conduct trials, but they may also be providing services for a fee to the sponsors that they engage with. So that's kind of where that crossover is. And frankly, I would say that a majority of sites act as a contract research organization in some capacity or another, and vice versa. So there's a lot of crossover there between the two.
And then what about academic research organizations? I guess they are also providing services. I suppose they would carry professional liability.
Yeah, so that's an interesting question. So academics in the space, if it's name a university that has some sort of hospital system attached to it, that hospital's already going to have medical professional liability. Now, interestingly, some of those hospitals will purchase, or academic institutes will purchase their own clinical trial liability policy, depending on the size and the scope of trials that they operate and run, just to provide some extra protection.
Yeah.
but it's really med mal driven for them still. And then they're going to be requiring that the sponsor obtain insurance that indemnifies them for their vicarious liability to the sponsor's protocol.
What did you say? I'm sorry, I missed the med piece.
Yes, sorry, medical professional liability.
Oh, medical professional liability. Got it. Okay.
Yeah, correct.
Okay. So the next obvious question is, I feel like how does somebody determine coverage and how much coverage they need? What's kind of a good way to get a handle around that?
Yeah, so I think the first important thing is to find a partner who really understands clinical trial insurance, because there is a lot of nuance when it comes to that. And that is somewhat of a loaded question, but I do have a good answer for it. So here in the United States, ironically, we're the only country that I am currently aware of that does not statutorily require a sponsor to carry product liability insurance. So what does that mean? That means that the insurance, the necessity for insurance here in the US is really driven it's driven by several factors. It's driven by personal risk tolerance of the company. Secondly, it's going to be driven contractually by sites and/or contract research organizations, and that's typically what drives it. And the larger the CRO, the larger the site that you engage with, the higher the limits they're typically going to request. When you move overseas, so anywhere outside of the United States, Canada, Mexico, Western Europe, Eastern Europe, all of those countries, it's a little bit, for lack of a better way of phrasing it, easier to determine, because those countries have very strict rules on what type of limit profile. And what's going to drive that limit profile in foreign jurisdictions, and this does differ from country to country, but typically it's going to be based on what type of trial is it. So is it a drug? Is it a device? What phase of trial is it? Is it first in human? Is it phase 1? Is it phase 2, phase 3, phase 4? Because each phase carries more risk than the next one. Obviously, first in human is going to be the most hazardous or risky, and phase 4 would be the least. And then the next thing that's going to drive that in countries outside the United States, and all of these things actually should be considered here as well. But the other thing that will drive it is the number of patients that are being enrolled in the trial.
Got it. Okay. So those are the main drivers to, and then does it then how to the calculation, you basically, when I call the insurance broker, I guess I would give them all these details, and then they would put the numbers into their system, and then it would spit out what coverage would be needed.
So it's not as cut and dry as that.
Okay.
It's
I figured.
yeah. So, how the process would work would be find a specialist broker who really understands the life sciences space. You would typically provide them with your contract with this contract research organization, because again, that may be the big driver, the main driver. If they require a $5 or $10 million limit, you're most likely going to have to purchase that level of liability coverage in order to engage with that sponsor, engage with that site or CRO. Further to that, they're going to look at your informed consent and protocol documentation and help guide you in lieu of contractual requirements. And again, the factors that would go into that would be personal risk tolerance. What phase of trial is it? Is it a device or drug? What type of device or drug? And how many patients are we enrolling?
What if somebody's not using a CRO or contract? What if a sponsor is doing this all in-house?
So if a sponsor is doing it all in-house, again, you'd want to revert back to personal risk tolerance and then all of those other factors that drive the perceived risk of a clinical trial, which is phase, patient population, etc.
So sometimes sponsors do like multiple studies, so they add new studies on their, and then some studies close. So what's the expectation like in terms of like communicating with the insurance company when you start a new trial or stop a trial?
Yeah, so most of the major insurance carriers in the United States will provide what they call blanket clinical trials coverage. So any new trials that take place within the policy period will automatically be covered by that policy. That being said, one of the conditions of the policy is to provide finalized informed consent and protocol documents for any new trials that will be conducted again within that policy period. And then upon renewal, the underwriters are going to look to see what trials you've added, how many more patients have been enrolled, et cetera, et cetera. And they're going to come up with the next year's premium kind of based on some of the trials that you've had ongoing, completed, and are planning to complete or start.
I see. Got it. Okay. That makes sense. In terms of the premium, does it really vary so much across insurance companies, or is it set by law?
Yeah, so it varies company to company, and it's part of what they call the excess and surplus lines marketplace, which means it's not regulated by the state insurance commissions. So that being said, price could fluctuate drastically from one insurance provider to another. Not all companies see risk the same, so they don't price it the same. So some folks may prefer trials that involve biologics, whereas another company looking at the same trial may, for whatever reason or another, feel that biologic clinical trials are more inherently risky.
Got it. Okay. So that really helps kind of understand the it's really driven by the insurance company, and then they are like, how do they define risk? Not necessarily like it doesn't mean like more expensive insurance is going to be better or inferior, right? It
Correct. Yeah. Now again, with the pricing, I will say just an interesting side note is 15 years ago, it was about 10 times more expensive than it is now.
Oh wow.
So clinical trials pricing has really come down drastically because there is not a lot of loss frequency because of the informed consent process. So due to that, the insurance companies of the world have competed for this business and as such created competition. And now we're pretty much at the bottom.
Yeah. So you remember you and I think we're talking about the Par Excel example that was years ago, 2005 or so, which is kind of the last known big issue that happened in the clinical trial space, where it was a phase one study, and I think 4 patients or 5 patients got sick, and maybe I don't even know if they died. I can't remember that, but I do. Right? Is that's the last known? Yeah.
Yeah, that's the last major high profile one where there was significant patient injury.
Hmm. Got it. Um, we had talked a little bit about the informed consent document, and and I'm just trying to see how the informed consent ties to the insurance from a patient's perspective. I don't know if that's making any sense.
Yeah,
There's like a injury language. What if you were injured in a clinical trial? And I think from a patient's perspective, I think just trying to understand what does that mean? Like even if there was some sort of compensation.
yeah. So one of the reasons that clinical trial liability coverage is profitable for the insurance companies is because product liability, one of the main avenues is failure to warn. So through the informed consent process, you are providing the patients who enroll, the study participants who enroll in your study with very broad language that states there may be risks that are unknown, unforeseen, etc. And because of that process and using that language, it's very hard for plaintiffs to sue for failure to warn. So that's why the process for sponsors is really, really important, because it will really, if the informed consent process is done correctly and the informed consent language is very tight, it's going to limit liability for the sponsor of the trial.
Got it. Okay. So when it comes to identifying the right insurance partner for an organization, like what process do you recommend they follow? Like how do they navigate this? Obviously we have you on the podcast and you work at an insurance company, but just generally speaking, what would that look like?
Yeah. So, you know, leaning on your network and or industry trade groups who partner with insurance brokers who specialize in the space is a good place to start. You also really want to vet whoever you partner with from an insurance broker's perspective, and ask questions and try and get a feel, or try and gauge their actual understanding of the clinical trial process. How frequently do they place clinical trial policies, and how well they, again, understand the nuance in placing that coverage, because it, it's it's really difficult to work with a generalist broker if you're conducting a clinical trial. Some of it, they may be able to obtain coverage for you, but it's going to come at a much higher cost.
Hmm.
And the other side of that is, if you're ever thinking of conducting clinical trials outside of the United States, the unspecialized broker is going to struggle to get that done for you, when a specialized broker would be able to turn something around very, very quickly in any of the countries in the world. So, it could become a scalability problem as well. You might find a broker in the United States who seems to know what they're doing, but you'll want to make sure that they have that international expertise as well, especially if you're thinking about taking a trial overseas at some point.
Got it. Okay. That's really important nuance to kind of pay attention to. How hard it is to change a insurance provider?
Yeah, so it's very easy. It's just some paperwork. It's what they call a broker of record, and those are done routinely, industry agnostic. So that's when an insured will decide to appoint another agency or broker as their agency of record, which allows someone like myself to then go to all of the viable markets. And when I say markets, I mean insurance companies that write clinical trial liability coverage, and obtain the best pricing, terms, and conditions on your behalf.
Got it.
So I guess with that said, it's never too late to switch your partner, because at the end of the day, all of the agencies theoretically have access to the same end product. So you're really just switching the service provider. You're not necessarily switching the insurer.
Yeah. So, we talked about all the different types of insurance, but like specifically for the clinical trial insurance, what does it actually cover? I know yeah, maybe we could shed a little bit more light on that.
Yeah. So there are some there are some policies out there that are not as good as others. So I will kind of retract a little bit on what I said earlier. And that typically happens when you're working with a broker who's not as familiar with the space. That being said, the typical clinical trial policy is going to cover your main exposure, which is product liability. So as a sponsor, what you're doing is you're testing a product that's not commercialized. So a non tailored product liability policy wouldn't cover your exposure, because there's exclusionary language within a standard manufacturing policy that would preclude coverage for products that have not been approved, tested, etc. So there's some nuance there. There are some other additional coverages. There's some sublimited coverages. And again, this is going to vary from insurance company to insurance company and what they offer. But clinical trial medical monitoring expenses would be one as a sublimit. Medical payments, no fault for clinical trial participants would be another sublimit. And then one of the really, really important ones is the medical professional liability for the investigators, sites, contract research organizations, et cetera. And I do want to make a very key distinction there because there is a lot of confusion out there. But when a CRO or a site is requesting that the sponsor carry medical professional liability, it's typically going to be via a carve back in product liability policy where it gives coverage back for that exposure.
Is it part of the clinical trial insurance or is it part of the product liability?
Yeah, so clinical trial coverage is a product liability coverage form that's been tailored to pick up the exposure of a sponsor.
I understood. Okay. So then the other two you mentioned, the no fault, and there was another one that you mentioned. Can you explain what those mean?
Yeah, so clinical trial monitoring expenses, that could include, so let's say there's a patient that suffers bodily injury or some sort of adverse event during the trial, and they need and there's expenses incurred to monitor that patient, above and beyond protocol. There could be some money to collect from the insurance companies by the way of a supplement. The no fault medical payments is similar to when you have a general liability policy and someone slips and falls on your premises, and there's usually a little bit of coverage on those policies that will pay for things like ambulances, et cetera, regardless of fault. So the reason I mention that is it's similar on a clinical trial liability policy. If there's some sort of patient injury, and they need to administer some sort of treatment immediately because they've suffered an adverse event, there's typically some money that can be collected from the insurance company to pay for some of those additional costs that wouldn't be picked up by the participant's health insurance.
Got it.
Yeah.
Okay. Thank you for explaining that.
Yeah, of course.
So can you tell us a little bit about insurance ratings and should life science companies pay attention to that before they make a decision on a policy?
Yeah, so you mean the rating of the company itself?
Yeah, exactly.
Yeah. So, insurance company rating is important. Typically, your contract with the site or the CRO is going to require some level of rating by the rating agencies. So, A minus is typically the lowest they'll want you to have a carrier as a partner. That being said, I'm going to say all of the insurance carriers, companies that I know who write in this space are A minus or greater. So I don't want to say it's a moot point because it is important, and the insurance company's rating speaks to their ability to pay claims in the event of a claim. But you're typically going to be required by contract to vet that out. And again, there's, the carriers who write in this space are very well-established insurance companies with big reserves. So typically I wouldn't foresee many folks running into that issue.
Got it. Okay. Perfect. So I think one of the questions you already answered I had was, when a clinical trial is conducted by an investigator, does he or she need to purchase insurance? And I believe the answer is yes, right? They need to purchase clinical trial insurance and then an institution like Stanford, they would have their own policies for their trials. Sorry, you were going to try to say something, so I'll let you.
No. Keep going.
No, that's it. Yeah, I just wanted to clarify because there is the industry sponsored studies, but then there's also investigator initiated studies that are these little trials that are done at one site, and I kind of wanted to see how those insurance requirements varied from.
Yeah, investigator led studies, sometimes clinical trial coverage is purchased. Again, it's going to kind of depend on what the study is. If it's a study for a new technique and it's not necessarily using a new device, it may not trigger that. And then typically, whatever institution the investigator is working for is going to be providing some level of coverage. Med Mal, and then again, they'll oftentimes buy clinical trial insurance coverage for their own exposure to those types of trials.
Got it. Okay. Perfect. And then what's the most challenging aspect of evaluating and finding the right broker, the right insurance policy, whatever the case may be? Yeah.
Yeah, I think the most challenging part about that is there there aren't as many life science specialists out there as there could be. It's it's a pretty small niche within the insurance industry as a whole, and again, you really need to vet your potential insurance partner broker because a lot of people can get you a policy that works and it may satisfy the contractual needs that you have, but there's a lot of nuance, and we've talked about some of that nuance on today's podcast, but that that nuance could really cause issues if the policy isn't constructed by someone who knows how to construct a clinical trial liability policy. And an example of something that could cause issue is the untrained, the unspecialized insurance broker may miss the medical professional liability card back for investigators, as an example. So, just do some due diligence on it. There are specialist brokers out there like myself. Ask them the right questions. Try and get a feel as to how much business they do within the space. Maybe ask them for some clients that they've worked with in the past. And I always recommend talking international, especially if you plan to conduct trials overseas, because that can cause a big headache if you're trying to get clinical trial liability coverage in Latvia and you're working with a broker who's never procured clinical trial liability in Latvia. And that could cause you a delay. Yeah.
Absolutely. Good. I think that's really helpful, and helpful pointers. And then when you're talking about like Latvia and doing trials outside the United States, is it under the same policy or is it a different policy that's created for the different countries?
Yeah. So that's actually a really good question. The So again, when you go outside of the United States, the countries are going to have specific requirements. And one of the requirements is that the insurance be local and primary. So that means it must be issued by a local, not always, but typically it's going to have to be issued locally. That being said, if you're a US company and you have clinical trials taking place here in the United States, you most likely will most likely have what they call a global master program. And what that means is let's say you buy $10 million in liability coverage here in the United States. And let's say you have a clinical trial in Latvia. And let's just say that the limits there are €1 million for a trial. The way it's going to work is you're going to have a policy in Latvia that provides up to €1 million. And let's say something goes very wrong and the damages exceed $1 million. And again, if the policy is constructed properly, and this goes back to requiring a specialist, but the way it would work is your U.S. master policy would provide what they call difference in limits over that Latvian. So it basically becomes an excess policy or an umbrella policy over all of your foreign locals.
Got it. Yeah, that's like an umbrella policy. Yeah, that's what you mentioned, right? Yeah, exactly.
Very similar in nature to that. Yeah. Yep.
Got it. Okay. Going back to the initial like types of policies we talked about, is there like an umbrella policy in there somewhere? We didn't quite touch on that, but
Yeah. So there's really not for clinical trial liability. Umbrella policies are a bit confusing because They really only sit over things like your workers' compensation, your auto, and your general liability. And within life sciences, product liability, it's carved out from general liability. So it sits as two separate towers. You have your general liability tower, which could include an umbrella, and then you'd have your insurance program for your products that you're either testing, selling, etc. And the way you buy limit for that is you layer it up with multiple carriers. So you could buy $200 million in liability coverage as a sponsor. It would just require, maybe 20 different insurance companies to build what they call a tower of liability for that.
Got it. Very interesting. So one of the questions I love asking people is like their favorite book or their favorite resource. It doesn't have to be related to insurance, something that's shaped the way you think, so that listeners can check it out.
Yeah, one of my favorites is Give and Take by Adam Grant. It's a classic. I try and read it once a year. Just helps remind you to make sure that you're giving out more than you're taking, and things kind of come back around in that way. And that's the book I always recommend people read, especially if they've never heard of it or never read it. Adam Grant's a great author and has some great content out there.
That's right. Absolutely. Yeah, I love Adam Grant's work. And
yeah, he's good.
Any other recommendations aside from Give and Take, or something that comes up to mind?
I do listen to quite a few podcasts. I love Jay Shetty's podcast. So he's got some great stuff as well. That's on Spotify. This is he's got some great insights on, just how to live a better life and be happier. So that's one that I have in my podcast weekly listening as well.
Thank you so much, Dan. And then where can people find you? I'll put the link to your website, but is there a way for them to get in touch with you?
My email is dan.fuld@alliant.com.
Great. Thank you so much, Dan, for your time. I appreciate it.
Yeah. Thank you for having me. Take care.
Thank you for listening to the Clinical Trial Podcast. For more exclusive clinical research content to get you to the top of your game, head on over to clinicaltrialpodcast.com.